Dear students, hopefully you're doing very well. Today we'll discuss about the class exercise on mortgage market. Now in our class we have already discussed about the mortgage market chapter. Now this is the class exercise that we did together. So before starting the calculation or explaining how to do the calculation, I would like to read the question first, and I will also ask students to read the question very fast and read the question carefully so that you can understand the whole scenario very clearly. So I'll read the question with you first, and then I will also discuss the solution. So the question is, you want to buy a house in Melbourne, southeastern suburb. You have already seen some houses and found that one house particularly very impressive and very keen to buy that property. The asking price of the property is $500,000, and after having a successful negotiation, you are willing to pay $460,000. However, your offer will only be accepted if you sign the contract of sale within next 7 days, and if the loan goes for unconditional within next 30 days. The loan installment period is the loan settlement period is 60 days. However, after approaching to your financial institution, to National Australian Bank or NAB, you have given the following information about the loan calculations. You can borrow up to 95% of the property price. However, in that case, you will have to take a compulsory LMI or lender's mortgage insurance valued $10,000, which will be capitalized with the loan amount. Nevertheless, you will also have the option to go for 90 days loan of the purchase price, and in that case the LMI will be $8,000 that will be capitalized with the original loan. You also need to consider the following conditions before proceeding with the loan contract. 1. Loan application fees will be $1,000. Land transfer fees and stamp duty $10,000. Legal fees $1,000. 1 year rates council fees in advance $900. Fully drawn down fees $500, which will be capitalized. Valuation fee $500 capitalized. And the last is settlement fee $300 capitalized. The bank offer you a 5.99% special interest rate per annum. The duration of the loan is 20 years, compounded monthly. You believe this is a good opportunity for you, and you have decided to go ahead with the loan. Please show relevant calculation for each questions. Now there are 5 record questions. 1 or A is how much you need to have as a deposit to go for 95% loan amount. B, how much you need to have as a deposit to go for 90% loan amount. C, what will be your monthly installment at 95% loan amount if you want to purchase the property. D, what will be your monthly installment at 90% loan amount if you want to purchase the property. And E, which is the last question, what will be your monthly installment if the payment made at the beginning of the month for both cases, which is 95% and 90%. This is the full question which you need to solve to prepare for the exam. Hopefully you understand the question very clearly. Now I want to indicate few things here so that you can understand the question more clearly. One, here the property price is $500,000, but after doing a successful negotiation, you are willing to pay $460,000. Now that is the original purchase price. The contract of sale need to be signed within 7 days, and if the loan goes unconditional within the next 30 days, that's another point. You can borrow up to 95%, and in that case you have to pay $10,000 LMI, or you can also borrow 90% of the loan amount or the purchase price. In that case, LMI will be $8,000. There are a few other costs that is associated with the purchase, which is loan application fees, land transfer fees and stamp duty, legal fees, 1-year rates in advance, fully drawn down fees, valuation fees, and settlement fees. Now remember, some of these fees are capitalized. For example, fully drawn down fees, $500 is capitalized. Valuation fees, $500 is also capitalized. Settlement fees, $300 is also capitalized. It is also mentioned in the question that if you're taking 95% loan, then you need to pay $10,000, which is LMI, which will be also capitalized with the loan amount. Or if you decided to go for 90% loan amount or the purchase price, that case LMI will be $8,000 and the amount will be capitalized. Now let's also look the other part of the questions, or how we're going to do the solution. So the solution will be, first of all, we will calculate what is the total amount we are trying to borrow, or what we are trying to borrow for this purchase price, and also we'll try to find out what are the other costs that associated with the loan amount and how much deposit we required for 95% loan and 90% loan. Now if you go back to the question, in the question said the loan application fee is $1,000, land transfer fee is $10,000, legal fees is $1,000, 1-year rates in advance is $900, fully drawn down fees $500 is capitalized, valuation fees $500 capitalized, settlement fee $300 capitalized, and on the top we have LMI will be capitalized. So what we're going to do, we start writing the solution like this way. So we said here is the 95% loan amount and 90% loan amount. Now the purchase price in both the cases will remain the same, which is $460,000. So we will put $460,000. And out of this, if you're paying 95%, then we'll be borrowing 95% loan amount. If you're taking 90% loan, then we'll be taking 90% loan amount of the purchase price, which is $437,000 and $414,000. LMI in both cases will be capitalized. So at 95% loan, LMI will be $10,000, and at 90% loan, LMI will be $8,000. Other fees, which includes fully drawn down fees, valuation fees, and settlement fees, this will be capitalized, so we put all this amount here. Because as this fees will be capitalized, it will be added with the original loan amount. So we do not need to pay this money upfront, as it is capitalized and included with the loan. So if you add all this value, you will find the total amount is $448,300 for 95% loan amount and $423,300 for 90% loan amount. And this is the amount actually is required for us to calculate the monthly installment. Okay, so this is the amount, which is 448,300. We need this amount for calculating the month installment for 95% loan, and for 90% loan, $432,300 is required for the calculation. Next, what we're going to do, we need to calculate how much we need to have to go for the loan, as we need 5% deposit at 95% loan and 10% deposit for 90% loan. We also need to pay other fees from our pocket. So loan application fees, which is $1,000, we need to pay from our pocket. At the same time, land transfer fees and stamp duty, which is $10,000, and these are not capitalized amount, we need also to pay. So we add $10,000 in both these cases. 1 year rate or council fees in advance, which is $900, we need to pay, so we include also this amount. And legal fees, which is $1,000, which is also need to be included. Now remember, the legal fees is basically if you want to purchase the property, you need to go for a conveyancer or a lawyer, and this fees is mandatory and you need to pay from your pocket. So if you add all this value at 95% or even in 90%, we need to pay $12,900 from our pocket. Next, what we calculated is the initial deposit required. At 95% loan, we need to pay $23,000, and at 90% loan, we need to pay $46,000. Now, this has been taken from this amount. So, if you calculate that 5% of $460,000 is $23,000, and 10% of $460,000 is $46,000. And total other cost we need to pay, which we get it from here, $12,900 at 95% loan amount, and at the same time $12,900 also for the 90% loan amount. So if you add both this amount, $23,000 plus $12,900, which is $35,900, and for 90% loan amount, it will be $58,900. Now, if you look at the question, we already answered the first two questions. So question number A and B has asked that how much we need to have as a deposit to go for 95% loan amount, and how much we need to have as a deposit to go for 90% loan amount. So at 95% loan amount, we need to have total deposit of $35,900, and at 90% loan amount, we need to have $58,900. Now, question C is asking that what will be your monthly installment and 95% loan amount if you want to purchase the property, and D has asked that what will be your monthly installment at 90% loan amount if you want to purchase the property, and E is asking what will be your monthly installment in both these cases if you want to pay at the beginning of the month. So we'll look at these questions now. Now the solution has been given. The repayment at the end of the month, if it's 95% loan, is $3,209.17, and at 90% loan is $3,030.21. If it's the beginning of the month, it will be this amount, 3193.24, and at 90%, 3015.16. Now how do we calculate this? So we need to look how the calculation has been done. It's very simple. If you go to your formula sheet, which is already in the canvas, so if you want to calculate the loan amount, the loan installment, we need to follow this formula, which is A divided by 1 minus first bracket 1 plus interest bracket close power negative n divided by I. If it's an annuity due, which is this formula. Now remember, students, that when we'll be calculating the loan amount, if it is at the end of the month, we'll use this formula. If it is at the beginning of the month, so instead of paying at the end of the month installment, if you're paying at the beginning of the month, then we need to use this formula. Now both these formulas are very similar. So if we look very carefully, I'm just trying to magnify the formula so you can understand the formulas. If you look at it, this one, loan installment, you'll find this formula is exactly the same formula with this one, annuity due, except only one part has been included, which is this one, 1 plus the interest rate. Other than that, it is exactly the same formula. So you do not have to worry for that. So let's go back to the calculations. Now I copied the formula from the formula sheet in this Word file. Now this is the formula, as you know. A is equivalent to loan amount. Okay, I will not write here. I will probably write here so you can understand. A is equivalent to loan amount. I, it's in small I, so write like that. No. For some reason it is not liking it, it's giving this big I. So just remember, I is interest rate, N is number of period. So if N is 20 years, then it will be 20 multiply 12, which is 12 months, so it will be 240 months. Interest rate, as we know, it is special interest rate, which is 5.99%. Then we'll divide it, so it's divided by 12 months, so it will be, I think, 0.499%. That is the interest rate, and others remain the same. So if you solve the this formula and insert all these numbers, you will find I need to change this one. So if you go back to the calculation. We know that we need, so the loan amount is $448,300, so which will be $448,300, 1 minus 1 plus the interest rate, which is 0.499. As we know, n is 240. Calculate here 240. If you do this, then you find the total amount would be at 95% loan is this amount. Okay, now the same way, if you want to calculate what is the monthly installment fees at 90% loan amount, which would be basically, you need to calculate from this amount at 90% loan, and then you'll find this solution. Okay, now this will be at 95%, and like that, 95% loan amount, and this will be at 90% loan amount. So this is the solution for the loan installment. If you want to know how much we need at the beginning of the month, as I said earlier, you need to add only this part. So we need to use this particular formula. So it's all remain the same. You just add 1 plus the interest rate, which is only this. So I think this is a very easy calculation for you, and you'll be able to do the solution by yourself. If you're using the calculator, so if you're using Sharp ELS 735, which is this calculator, then if you're calculating at the beginning mode, you need to press this button, second function, and on the top you'll be FN, which is this function. Then you'll find there's a small sign here, it's called beginning, BEG. So if you have this, then you are actually doing the right. One more tip, please remember, if you are using the calculator, when you finish the monthly installment, make sure you clear the memory of the calculator, because sometimes the Sharp ELS calculator, it keeps the memory by itself inside, and when you'll be calculating the next calculation, then it can recall the memory, and that will give you an incorrect answer. So make sure you clear the memory every time when you're doing a new calculation with the calculator. This is very, very important. Hopefully you like this video, and it will help you to understand this calculation. Thank you very much, and I wish you all the best for your exam. Thank you.